Okay, so the Edge Finders free week is finally over, and what do I think of it? Right? What do I think of it? Well, the same thoughts I have of it the first time. It is by far the most innovative tool for retail traders, especially for us who do not have a tool. Because I mean, those hedge fund traders, bankers, the big traders, they have tools. They have a lot of tools to analyze the market for them. Analyzing the market is a lot, especially the economic aspects of it. It is a lot. To analyze the seasonality trend, the current trend of the market, those are very easy. All you need to do is just put the chart, put an overlay of the chart, and you're done. But when it comes to the economic data, for example, things like CPI, PPI, things like GDP, all those stuff, job employment, unemployment, all those stuff, it's not straightforward. So pardon me, I'm a bit tired and I returned from work this evening. Well, the Edge Finder is still by far the best tool for a retail traders, and that's to Trader Nick. Thank you for such a tool. It is absolutely beautiful and absolutely good and useful to traders worldwide. Without further ado, let's head into the chart, right? So this morning I made a live video where I talked about a particular market, the Euro US dollar. For those of you who didn't watch the live, I'll put the link to the live video somewhere around here for you to see. But we only analyzed the Euro US dollar, and based on the analysis of this morning, we had a different trade from what you are seeing right here on the screen. So this screen right now is a different trade entirely. Why? So on the 15 minutes we had this trade. I'm going to pull back time to the trade we took on the 15 minutes. So this was what we saw on the 15 minutes. I'm going to hide this so you don't get confused. So this is what we saw on the 15 minutes down there. This is what we saw on the 15 minutes. And I already took this trade, right? I took this trade, and I took this trade when this price was down here. That was when I took this first trade. The first trade I called out in the morning. I forgot to look below when I was in the 15 minutes. I didn't see the 1 hour. But a mistake is a mistake. Not really a mistake, basically. A fail. Because this is it. I personally saw price starts running above previous lower time frame high. Now this is the thing with market structure. You need to be able to see beyond the time frame you are looking at. To be able to see above it and below it, all just by looking at the candles. So from these candles, this is the first high. I see price take it out. I see price take out this other one. So to me, I found this 15 minutes demand zone, and I felt personally, right, I felt it is one of the best zone you can take, because when I do this, when I pull down this leg, what I was expecting was for price to, return, click us in, and then push us at least to this level. This was what I actually expected. But it seems price had other plans, because what price did in the next 15 minutes was, in like a couple of minutes later, you can see this was at around 9 something. That was when it got clicked in. But what price did was price came down and then wicked me out of this trade. I got wicked out of this trade after about how long? This was roughly 5 hours or so. 9, 10, 11, 12, 1. About 4 hours. About 4 hours and 15 minutes I got wicked out. And as soon as I opened my chart, right? I opened my chart. Immediately I opened the charts, I noticed something. I'm going to go to the 1 hour now. So on the 1 hour, this is the problem with XNext. So on the 1 hour, this is what I noticed. So when I went into the higher time frame to say, okay, I've been coughed off, go into the higher time frame and look for something reasonable, and then I saw this zone right here, which I had already marked out in the morning. This is a 1 hour zone. Directly below it are lower time frame zone. So this is like a higher time frame zone. It's a higher time frame. Zones are like magnets. The bigger the time frame, the stronger the magnet. So being that price has not broken below this low, I said, okay, fine, we're going to take a second run at it, and this time we're going to take a run on the higher time frame. If price actually breaks this 1 hour time frame, I might as well just sit out of the market. I've made 2 losses in a day. Just give it up, right? Just give it up. And that was when I finally decided to take the current trade that we see right here. So this is when I decided to make this current trade. And when I took this current trade, so price, let me go back again and show you guys exactly what I felt, what I saw. So what I saw was this. I had seen price wicked into the zone and price was pushing ahead. Price had actually gone beyond my necessities anyway. But I said, all right, fine, let's just take this trade at where it is right now, right? Knowing fully well that with what I'm seeing here on the 15 minutes, it has definitely changed some sort of structure. So if we go down to the 15 minutes, if you go down to the 15 minutes and you look at this 15 minutes structure here, what you're going to see is, allow me to remove all of this and I'll hide this. So in the 15 minutes, what's the structure basically? The 15 minutes structure is from this high to this low. Like you all know, I like to draw like the clear structure and substructure. So we have this high to this low, this high to this low. So price is supposed to break this high if it is serious, right? It's supposed to break this high. Now price has finally, right, on the 1 hour, price has finally tapped into the supply zone, the demand zone of the 1 hour. It created a demand zone in the 1 hour that's tapped into it. So what do I expect price to actually do after tapping into the zone? Well, one thing, right? One thing, break above the new zone. And that is what price has done currently. So that's why I said if price should go below, like break me below the zone, for example, like let's say price had done this, then I'll start waiting for a higher time frame zone. I'll start waiting for price to create, you know, a clear supply zone over at the stop, somewhere within the stop, and the new range will become all the way from the high to this low. This will become the new range, and I'll be waiting for price to come to this 4 hour zone. So it means I'll be looking at price to do this. So after breaking this lower, I'll expect it to come back, which I will then take a trade aiming for at least the 50% retracement or the 38% retracement. So I'm aiming for price to do this. But surprisingly, you know, luckily for me, price decided to respect this particular zone and still push further up for another run. And now I am 8,000 naira in profit. In this situation, most people would want to chicken out of the market. Like me, I will not lie, I really want to chicken out of this market. But what I'm going to do here is something quite different. So on the 15 minutes, right, this is the full structure. Price is creating a new structure after ticking in. It's supposed to push up. Now if price is to really continue being bullish, which, you know, price has been bullish for a long time now, we don't know if price is still going to be bullish. This is the last structure that was formed, right? This is the last structure that was formed. So we expect price to come back here. You can see this zone here, to come back here and push forward, but only in the case where it still wants to remain bullish. If it doesn't want to remain bullish, it's going to be terrible for me, because it's going to come down after all this profit. It's going to come down and then break through and start to do a retest for lower runs. So in order to lock in my profit, right, I'm going to move price. I'm going to move my trade. I'm going to move my stop loss to a very credible arena. And where's the credible arena? Well, this is where it coughed out, and hence I'm going to stay right here. So I'm going to be locking 5,000 naira in profit. I'm now literally, in case you missed it, this trade was literally a 5,000 naira trade. So it was right here at 5,350. So now I am locking that 5,000 plus in profit as a stop loss close for myself. So you can see my stop loss now is now locked within a profitable zone. So even if I slip off, I'm going to slip off obviously, and price starts to retrace for this zone, I'm not going to be bothered because I've already made my 1-to-1 risk to reward ratio already. Another thing I could have done was, if I had taken like a higher amount of lots, right, then I would advise you to have closed like 75% of your trade as of right now, so that you'll be closing your trades here right now with roughly this amount. So assuming you had a higher lot size, let's say 2, you should be sitting in 16,000 naira profit. So closing this trade right here with 16,000 naira, and then raising your stop loss to this zone, or raising your stop loss to break even. Either one is fine. But for me, since I do not have that liberty, I do not have that liberty with this trade I just took. I took it on a 0.01. This is the lowest micro lot you can find. Instead of me having this go against me later in the night or sometime, I could as well close this trade in this max profit I have gotten. Or I could sit on the 15 minutes and stay up all night, and I'll start watching this trade to see if these candles structures, if these structures are being broken. And if I see these structures getting broken, you can see them. If I see this structure getting broken, I might as well close out the trade. So the best thing I can do right now is to trade the 15 minutes. And from what I'm seeing here, it's already consolidating real bad ever since 7:45. So it's consolidating real bad. And hence, we expect price to start to push downward. So this is all I can say for the euro US dollar right now. And with this knowledge of mine, I best just set my price at, well, a place where break of structure can evaluate occur. This is where putting me in 6,000 naira profit, thereby raising me back to, I think, 0.04% of this account. Is it 0.04? Actually 4% of this account. So if the price closes there, so this is it. This is the loss from this morning. I actually closed my New Zealand dollar trade in loss also. I shouldn't have closed it. I wish I didn't, because if I had left it, I would have been in profit right now. You can see it then went back up to crazy profit. I closed it down here. I got frustrated, man. I was tired of seeing it go up and down, up and down, up and down, and now it's going up, but that's after I've closed it off. And I don't regret it. I don't really regret it. It's closed and it's gone. That would put me back into looking at this trade, but I do not want to look at this trade much because I'm looking more at spreads. I'm looking more at spreads of the market before I take any trade now. Night spreads, scary. After I saw what I saw last night, 38 pips spread for the opening of markets, that caught my trade in the Australian dollar, New Zealand dollar. That was like a huge cut. That trade ended up working perfectly fine. You can see the trade ended up working perfectly fine, but because of the spread, it was crazy. It just closed my trade out. It cost me 2,000. But well, smartest and best way to trade is the 1 hour, but not on crosses. It's good to trade on major. Major is like the best thing you should trade on, and that's my advice for a lot of people right now. Trade the majors, follow the structure on major market structure, and you have yourself good reasons to make profit. Or you could learn the DAX theory, right? The DAX strategy, and all you do is make money every day, right? All you do is make money every day. So with this, I'd like to say thank you. It's just a short video. I just wanted to show you guys the updates of the current situation of my trades and tell you guys thank you for watching. I'll catch you all on another one tomorrow. Peace.